Hey everybody, how you doing? Welcome to the Reverse Mortgages 101 webinar. Let's go ahead and get started, and let's go ahead and live stream this here on YouTube. Okay, I think we're live here. Do it for that. All right, let's just do it on YouTube. Hey, interesting. Okay, well, let's go ahead and start presenting. All right. All right, let's do this. Okay, let's go ahead and present this here. And share the screen. Okay, welcome everybody to the Reverse Mortgages 101 webinar, what every senior homeowner should know about reverse mortgages. My name is Emmett Dempsey, mortgage broker owner, Treasure Coast Mortgage. Okay, a little bit about me. I am very much Cheryl's husband. That's why Cheryl also owns a processing company, and that is my family here. Minus our oldest, who is too cool for pictures, but twin boys and a little girl, Amelia. And as far about me, I am a former Army officer. I coach flag football, soon to be tackle football as soon as the boys get older. We close loans fast. I'm a mortgage broker owner, so we have multiple investors, all the things. Been in business about 5 years, own company, mortgaged since 2007. So as far as my why about reverse mortgage, that's my mom Evelyn before she passed. I've had a reverse mortgage focus since 2014, in the business since 2007. Like I said, did the reverse for my mom, but I'm on both sides of the table. And I'm very passionate about reverse mortgages because I think it's a very outdated and misguided narratives out there. My goal is to educate on this topic online so seniors know the facts and not the spin. Okay. Well, webinar housekeeping. We're going to have about 30 minutes presentation time, maybe not even that long. We'll do a Q&A at the end. And if you have any questions while I'm presenting, type them in the chat box. All right, so I'll be posting a link for a free one-on-one call with me periodically to review your reverse mortgage options. All right, what you'll learn today, we're going to go over the current retirement crisis, reverse mortgage basics and the history, frequently asked questions, different closing costs, how to use the funds, some myth busting, and some Q&A. So, okay, keep going. All right. So, what is the retirement crisis? Basically, you can look up these stats. Some key issues in minds of seniors. Insufficient savings. About 80% of older adults are either struggling financially now or risking retirement. Many live on just Social Security alone. Longer life expectancy. We're living longer these days, which is great, right? But many don't have the funds to last because now retirement lengths are about 20 to 30 years. That's not so good. Then you have healthcare costs, medical expenses, and they continue to rise. But then you have, inflation, cost of living, especially the last few years. It's really put a strain on fixed incomes. So, but on the flip side, you have home ownership. Over 80% of those 62 or older own their home. Seniors in the United States have over $14 trillion in equity. So the median home equity about 250,000. Many leave this wealth untapped. AARP research, over 80% of seniors wish to remain in their home. Okay, so on this side you have this crisis, and then but you have homeowners with a ton of equity. It's like what gives? So what's going on here? So why are these two things true? Has been my question. So I think that the bridge could be reverse mortgages can address a lot of these issues. But however, reputational issues have dissuaded the seniors from thinking about the solution because the mere mention of reverse mortgage can cause an instant reaction. And I'm here to change all that. Much of it is based off the old guidelines, pre 2008. From runaway financial gurus, et cetera, that are out there, and all the misinformation. And I think there's just a lack of a general education about them. So, but that ends today. All right. So what is a reverse mortgage? So a reverse mortgage, helps homeowners age 62 or older, on the HECM product of the home equity conversion mortgage, convert a portion of their home equity into cash. And you're not required to sell the home. The bank doesn't own your house. You don't give up title or take on a new monthly mortgage payment. The loan balance plus any accrued interest, does not have to be repaid until a maturity event occurs. Okay. So different options. There's a few that we offer. But namely, most of your reverse mortgages would be the HECM product, a home equity conversion mortgage insured by the FHA. But you also have some proprietary reverse mortgages. They go as early as 55, up to $4 million. And also Home Safe Second, if you want to keep your low rate first. But those are totally different conversation altogether. All right. So who is eligible? For a HECM, 62 years or older, U.S. citizen and lawful permanent resident. You occupy the property as their primary residence. You receive counseling. You maintain property obligations, such as homeowners insurance and property taxes. All right, so what are some eligible properties? So new or existing single family, obviously in good condition. New or existing 2 to 4 units. But remember, a single family is 1 to 4 units. So if you can find a quadplex and live in one, rent out the other 3 sides, that's definitely an option. Here in Florida, I don't see too many of them, but I know in other states they're very prevalent. So just keep that in mind. FHA approved condos or single unit approval. I know here in Florida, I don't think there's one complex that's approved. So you have to get a single unit approval. Of course, and also manufactured homes that meet FHA standards. Manufactured are double wide, single wide that are on fixed foundation and real property. And ineligible properties, if you are a mobile home and you have land rent, that's not eligible. Okay, so investment on properties, vacation homes, properties with illegal accessory units, mixed use, more than 49% in co-ops and bed and breakfast. Generally, things that are not eligible for normal mortgages. All right, so what are some of the safeguards? So, reverse mortgage is a non-recourse loan, which means you can never owe more than what the property's worth. There's always you or your heirs will never owe more than the property's worth to be able to sell it at the end. There's a financial assessment. So to make sure that you're able to complete the obligations of meeting your tax and insurance while you're in the reverse mortgage. Also, non-borrowing spouse provisions, which we'll go over in a minute. But those are some of the things that in the past were issues. All right, so in 2015, HUD initiated a financial assessment requirement. Before that, it was pretty wide open, and there's not a lot of caps. But this is one of the many safeguards that they added. So they look at your willingness and capacity. So you look at your credit payment history, your tax and insurance payment history, and as well as your income, assets, expenses, and things like that. But it's key to note that unlike on a normal forward mortgage, that's not a debt to income standard. It is a residual income standards. It's pretty easy to qualify. Because one of the biggest issues that I see, I have senior clients that have amazing FICO scores, paid off mortgages their whole lives, and then they come into retirement and their income drops and they don't qualify for hardly anything. So the reverse mortgage is one of the such solutions for this issue. All right, so this is the original intent. This is the verbiage from the National Housing Act. But essentially, for seniors to meet their obligations, to use their home equity to meet their obligations, and that's what the original intent was. History from the 80s, FHA insures their first HECM, and a lot of the horror stories that you heard were a lot of pre 2008. There was really no loan limits. They can get out more equity, so they had to use a lot of their equity very fast. You also had situations you had much older spouses. You had like an older husband and a younger wife. The older husband dies, the younger wife had to sell. That's some of the stories you may have heard. Yes, that happened, but that was before non-borrowing spouse protection was there. Also, initial fund limits. 2009 reverse purchase, which is another great program to do. And then I went through now single unit approval condos. They're really trying to make this program pretty easy, folks. Excuse me. All right. Frequently asked questions. How old do I need to be? Generally 55 years old is for the home safe second. In general, is a good starting point. Some states and products require at least 60 to 62, and we're talking about the HECM, and it's 62 years old. How much do you qualify for? It all depends on your age, the state you live in, the current interest rates. The lower the rates, the more you can get out. Your home's value, the reverse product and distribution option. Now, it's key to note that you can never get the full value of your house. And here's is one such example. Here's a hypothetical $500,000. You're 65 years old, $500,000 appraised value, and you owe no mortgage. But you can see here, like, one of the things I hear a lot is like, well, I can't get it all out. It's like, yeah, because you have those caps. You have the equity reserves, because what happens is your loan balance will grow and it consumes equity. But in this situation, so you get the cash, line of credit, and the fees. But that's just a general thing to take a look at. So you can't get it all out because you have to have that equity reserve to pay for the reverse mortgage. You know, okay. So you determine the borrower power, and so HUD uses the age of the youngest borrower or non-borrowing spouse. So generally, older applicants can get more, younger can get less. You round up the nearest age. The closing date was within 6 months of the next birthday. All right, for your last question, what happens during a HECM? You borrow a portion of your home's value. Like I said, a portion, like I said. The lender adds fees and interest to the amount you borrow. Your interest compounds, interest on interest, and it does consume equity all over the years. However, but you have appreciation that happens too. So in many cases, equity remains. And getting back to that scenario, 65. Here's a situation, but it looks at year 1 into year 35, and then you can see all the way to the right is equity. And they say if your loan balance, which does grow, your property value grows too. So let's say you want to move in 7 years. Okay, so your loan balance grows to that. You pay it off. generally, and that's at 4% a year, which is pretty conservative based on what we've been seeing. And then so after 7 years, you'll have 484,000 in equity, to pay it off. And this is what I saw after my mom passed. So there was equity left. It's just this notion that you get a reverse and then it's just going to burn like a candle and burn up your equity. That's just not true, because it's a slow progression throughout the years. Then you have equity appreciating as well. Okay. Some more for the last questions. How I see my cash, it depends on your choice. Most of my clients will take a lump sum plus a line of credit. So you can get term or tenure, you can get payments. But most of my clients would like to invest that cash on their own. But then again, that's things we'll discuss in the one-on-one. Okay, what happens at the end? Reverse mortgage, ends when you no longer use the home as your primary residence. Like a permanent move, selling the home or last borrower passes away. At this time, the balance must be repaid. All right, close cost. All right, so how much does it cost? Generally, reverse mortgage costs are relatively the same as any forward mortgage cost. So, but it does it as an FHA loan. FHA upfront mortgage insurance premium. So that's 2% of the value of the house. And then that's a key concept. It's just most fees on a forward mortgage are calculated off the loan amount, whereas a reverse mortgage is calculated off the appraised value. So it's just a higher multiplier, and therefore the fees are higher, not because it's a reverse, it's because that's what the law says. Like here in Florida, we have doc stamps, title insurance, and those amounts are based off of a multiplier, usually the loan amount, but now it's based off of the appraised value. So those fees are naturally higher. So when you hear the things, oh, well, reverse mortgages are more expensive, it's like, yeah, well, the government's going to get their money, guys, and we have to follow the laws of title insurance. So based off of what it potentially could be. And we as a broker, a loan origination fee. These are HUD rules. The greater $2,500 or 2% of the first $200,000 of home value, plus 1% up to a maximum of $6,000. So it depends on no matter what, $6,000 is the cap. Standard closing cost, calculate from the appraised value, like I said. All right. So what is the process of a reverse mortgage? Essentially education, so you do your research, and then we have a conversation, and then I send a proposal. And the proposal will have those documents, this document, like I showed, amortization based on your situation, on your equity. Are you paying off a mortgage? What is your situation? So everyone's different. So in step 2, you say, okay, I like it. Let's move forward. 2 and 3 kind of happen at the same time. So in the meantime, we'll do a formal loan application, review credit, income documents, etc. And then you go to HUD counseling. So on the proposal will be HUD counselors. You pick one off of there. You can go in person, on the phone. You have to do a required HUD counseling. That HUD counseling is good for 180 days. You get that back. And then we do the application and then the financial assessment. So I'll do the financial assessment, before we submit to underwriting, make sure that there's nothing out of the ordinary, and then that it will fly. We'll do a lot of the work up front to make sure, the processing piece is pretty easy. So once we do that, we go into processing, order the appraisal, disclosures, and a normal underwriting process. Goes in, gets submitted underwriting, clear conditions, and then we're clear to close. And then we have step 5 is closing, and then you have your reverse mortgage and get your funds after rescission period 4 days later. All right. So let's look at facts versus myths. All right. Number 1 myth: reverses are a loan last resort. No, they're not. So in fact, the reverse is a strategic use of your home equity. I did a video on my YouTube channel referencing sequence of returns risk, how even if you have a significant asset portfolio, you can use a reverse mortgage credit line to offset bad years. That way you stay invested. So it can be part of your overall financial plan. Another myth I saw on social media, that I can lose my house. No, you own the home. You don't lose ownership. You don't give up anything like that. It's a lien on your house, just like a forward mortgage is. Okay, so you own the home, not the bank. As long as you uphold the terms of your loan, you can live there the rest of your lives and the rest of your spouse's life until it goes to your estate and it has to be sold. All right. Next myth. My neighbor told me I won't be able to sell my house. In fact, a reverse mortgage creates 0 obstacles to selling your home. 0. Just like any other sale. So the reverse must be paid at closing. Now, another one is I read online, there are a lot of fees. Well, I just explained before. Yes, reverse mortgages are higher because of the mechanics of a reverse mortgage are based off the appraised value versus the loan amount, and it has FHA mortgage insurance to make sure it's a non-recourse loan because it pays for every reverse mortgage in the country. So yeah, so they are higher by by nature, not because they just want to overcharge you for just because. It's because of the way reverse mortgages are underwritten. Yeah, but again, most fees are rolled into the loan. The only thing you pay for out of the pocket is your appraisal and your counseling. So everything else is just added into your loan. All right. So biggest myth of the law, it's not safe. One of the large misconceptions is that they're dangerous to consumers. The truth is that reverse mortgages are heavily regulated, guys. There's a very specific sequence that has to happen. So for I as originator have to be very careful, to make sure it's done in the right order, or it just gets wiped away. So, in the regulated, and there's more safeguards have been added over the years. They've added second appraisals for larger properties. So, I feel very confident with the safeguards that are in place today. Okay. There's a lot of watchdog organizations. You have your, HUD is the Minister's FHA program, FHA, and government agencies. You have trade organizations, the National Reverse Mortgage Lenders Association, the voice of the industry, and of course the CFPB. Whatever iteration happens there, they still regulate these things, guys. All right. So that's kind of basically it. Help you feel more educated on reverse mortgage possibilities. Just go to the link in the chat, book a 30-minute phone call. With that, we will. It's not that. And with that, we'll do some Q&A. Just go ahead and go ahead and click on the link in the description. To book a call with me, and let's see what we can do for you.